Good day, traders. I trust you well. Name is Dr. George Nyabadza, and I'm going to take you through DAX40 for last week from the 12th of May all the way through to the 16th of May. So as usual, I'm going to switch off my video so I do not distract my good self. All right, so this was the 12th of May. Now, you will see on each of the charts that I'm taking you through that I have two candles marked, yellow boxes. And that's the first one is the open of the European markets, London session. And the second one is open of the US markets. Now, I am in the market typically from this open here and, right up to, about here. That is, well, there's the US Open, and I am working all the way through. Let me move this a little bit. Probably let me mark it like this. Here we go. Away is 17, 30, 16. It's a bit slow, right? Okay, so I'm going, and that's important because I mentioned that. So I'm in the market right up to my local time presently is 5:30 p.m. That's how far I'm going into the market, which is exactly 2 hours after the US markets have opened. So I go through the typical, 18 candles, first hour and a half, and then I just wait to see what's happening. The reason for that is I'm trying to time the actual close of the London Stock Exchange, which, happens 2 hours after the US Open. So I'm working right through to that so that I can catch any breakouts that happen at the end of the session. So I'm in the market from here all the way to here. So I've got a good 100 candles that I'm working with on the 5-minute chart. Now, if you are trading out of Asia or the Asian Open, there's no specific exchange that I'll be looking at. So you just decide, if you are in Singapore, so use that, right? If you're in Australia, use that. Whatever market you use that as your opening exchange, and see what happens from that very first candle. So that's pretty useful to bear in mind because good things can happen at the open. Boring things can happen at the open. Boring things are just trading ranges and like, oh goodness, they're gonna be like this. Good things are, get into trends, either straight from the open or, within that first 18 bars, and you can just, work those as you come through. So DAX looking through the Asian session, there have been nothing to trade there. We're just in a trading range, within this high and that low. I mean, that opening candle I usually tend to ignore. The high and the low just still in that trading range. When it came to the open of the London Exchange, I was quite excited when I saw this formula. I thought, oh, fantastic. I am want to see, or I hope the bulls can close in right at the top. And I know we're pretty strong here back inside. So I might take that trade or wait for the next one. But when I get a tail, I kind of say, oh, this is pretty boring, because the bulls were strong. Why are they allowing a tail? So we ended up with that trading range. If you're scalping, some guys are scalpers, you take that trade and see what happens here. But, I'm not scalping. I'm trying to, find trades and structures that I can hold on to for as long as possible. I end up scalping out of trades because that is what the market would have given me. Okay, so scalper, you could take that and decide where to put your stop, but then you're gonna get out when you start to get that. So I let that go, because I said this is pretty boring. This is not taking me where I wanted to. When you got to the to this low here and the bears were breaking out, I thought, well, if the bears give me a enough breakout, we got the measured move. We eventually go to the measured move. But I would have wanted to see a breakout, maybe a test of that and try and sell within here. But you pull back into the range, created another range here, with this low, that high, that low, another trading range. And within here, there's nothing for me to trade. So then I let that go. Again, here I said, okay, if we break out of here, let's see what happens with this trading range. The lines are not straight, just to save time. Okay, so we eventually got there, but nothing to give us good structures to trade. Again, another trading range created. I'm not even sure if scalpers would have got in here, because you didn't see this, you'd have seen that low. So it kind of just ended up as that kind of a day. So at the open, I thought, well, that's what we've got. And when that was created, now you see all these levels, measured, move, trading ranges, right? From the first candle. I think it's important just to mention this because as we go through, I'm not going to be drawing all the lines. I'm going to keep saying, guys, remember the measured move trading range, measured move of the first candle right up here, measured move of that range right up here, right down here, measured move that range down. So at all these hidden levels of support when the US markets open, so you just kind of, be very cautious. Had I had a follow through, probably looked at sell. So that was kind of the day that I had on DAX. Not much opportunities for looking for swing trades. Scalpers probably would have taken that with that, but nothing else really later on to try and jump into from any perspective. But key things is I was looking for these breakouts right from the open and I did not get them. So that's kind of what unfolded on that day for me. Later on, if you were in, I'm going to take this out when I get out to go home. Then if you were in, at some point you'd have said, well, okay, trading wedge top, 1, 2, 3, test of that breakout point. Maybe the bears are strong. If the bears are strong, this is fantastic. Let's see if I can get in here, not or follow through. And didn't get that. So if the bears are strong, maybe they would have tried to test down here again and given you an opportunity. But we ended up just going into, trading range price action. So pretty difficult to really justify any trades on the day on the DAX. The next day, the Asian session, we had this kind of trading range. 1, 2, 3 wedge, and probably thought of the bulls are strong. Let's see if we break out above here and keep going up, but we didn't. So pretty disappointing. If you're a bull, no chance for it to go up. So if the bears are coming down, you can't sell into that level, right? But once you break out beneath that, and you start to wonder whether we're going to get to the measured move of that. So, okay, there's a breakout, there's a pullback. Let me take that and see how far we'll go because you might get rewarded. So, kind of at that leg one, eventually got there, leg one, pullback, leg two. So, if you're taking that trade, which would be fantastic trade to take, you could be prepared to touch your stop very quickly if we react. But it failed immediately. So if it hang in, I've gotten out. If I take that, I get out pretty quickly. You could have said, well, I'm going to take the breakout pullback low one, which would have been fantastic. Okay, too much stuff here. Then at that point, before you saw that, I would have said, okay, I see the breakout pullback low one, take an earlier trade, okay, instead of considering your trading range. They both are legit. You have taken that trade. Fantastic, still be able to get out beneath that. Would have been reasonably fair. Then with this kind of trading range, didn't give you much opportunity to do anything else here because you barely broke out above it. Bulls accelerated up all the way into this cluster, right up until the open. At the open, I was looking at that and I said, man, as we were about to open, my thoughts are like, well, what is likely to happen? What am I likely to trade if it happens? So I thought to myself, well, we've kind of come out of here. Good for the bulls. If from there we have bull acceleration and we close on the high, I'm prepared to buy. If we have bears giving me a close below the low, I'm prepared to sell. But we're the big doji. That's all here. Tails above, tails below. You can't sell beneath here. You can't sell above there. Ended up in a trading range for the whole day. This is what I call a rubbish day. I'm like, man, I came to work all the day and look at this rubbish that I got. Okay. Come to the next day. Pretty good an opportunity for the bears. You have had the lines there. Always drawing lines, guys, or that. So I said, okay, bang, not good, pull back, low one. I'm going to sell that. Put my stop up here and see if I get acceleration. Put your stop up here. You always put the stop in the correct place, guys. Put your stop up here. You get in here, start to get acceleration, start to tighten your stop above candles, and eventually you get out. I tighten my stop above candles or below candles for going up until I get to break even. Then I can start to think about, do I hold on to the trade or not? You got to preserve capital. Once you're in, you got to manage the trade. So if you did that here, you might have exited on that micro double bottom. Perfectly fair to do that. But this is interesting. Once you see a breakout like that you traded or could have traded, which means when you get a breakout pullback low one at the EMA, you've got to take it. Inside candle beauty. This is a beautiful entry. Asian session has been rewarded nicely. Put the entry here, tight stop above here or a measured move stop above here, and eventually get out above here. That would have been a fantastic reward for you in the Asian session. Then we end up trading range behavior, going sideways. Trading range, got to wait to see whether they get a breakout, nothing, or a breakout pullback. Nothing. There's a breakout. This first right here, breakout pullback failed. Breakout pullback. There's a breakout. You can take that trade, put a stop here. You can put it beneath here if you want, but always look, like I said, in the course at the nearest level. Put your stop here. That's pretty fine. If you want a measure move stop, that is also perfectly fine. Remember, you can use a stop here, or you can use a measured move stop down here, which is perfectly fine. You'll have to get one-to-one there or X a little bit earlier. That is fine, but that would have been a fantastic one to trade. Of course, watch out for that level. When I say watch out, when you're taking a trade, you got to have a minimum 1x risk reward clearance. And I've spoken about that. As long as you have that, you take the trade, so that by the time it gets there, you can manage. If it fails, that's fine. Don't trade into less than 1x risk reward return. Breakout, we have a pullback. Bears tried to make it fail. So that was the first breakout. They failed. So it ended up being a wedge pullback, bit of acceleration straight into that level. Nothing for us to do out of this. So we just wait. Again, same thought, like I said earlier on. When this was taking place, I was like, man, I'm going to buy this. If it closes above its high, I can buy that breakout, stop here, or wait for the follow through. If I miss that, wait for the pullback. But you can see immediately the bears failed, and that is a problem. The tail at the open of the first candle is a problem, guys. Because you're going to say, why? If we're strong, let's keep going. So we get that, and they fail. Measured move of the first candle, breakout beneath it. Not convincing for me to sell. I mean, it's a very small body. We're back in the trading range, and I want at least 1x risk reward. If I sell that, if I put my stop above here, 1x risk reward is down. It's way below the measured move of the first candle, so I'm not going to do it. But so I let it go. Then I had a tight trading range. When I put this trade in so you could see. So tight trading range, and when it broke out beneath it, we've got to the measured move. We have a tight trading range, wedge, tried a wedge, they failed, and the bears accelerated beneath it, closed beneath even that level. In fact, if I'd used for the breakout, that candle will close beneath it. So that's from empty for I sold here. And when you got that failure, I exited there. So waited a little bit, but managed to get into the market. Then I didn't get anything to trade. And what does that mean? Good for the bulls. If the bulls continue to accelerate up instead above the 10 EMA, I would have looked to buy. Nothing for me to buy here about these dodges. You could have tried to buy that, but I wouldn't, because broke out tail, broke out tail, broke out tail. That's like 3 attempts, they can fail. So don't do that. If the candle was closing above its high, kind of justifies it. Bears tried, failed. Bulls tried, failed. Nothing until the US Open was a doji. And that's like, well, I'm going to go home early. When I see that, because I know I'm working the first 2 hours of the US session. So I'm waiting, looking for breakouts. If I get dodges, it's just a waste of time. Sometimes I even just shut the system them out 30 minutes early, right? Next day, Asian session. trading range, nothing for you to buy there, nothing for you to sell there, test of the bottom, nothing here. When you get to the session, London session, I'm looking at them saying, this is fantastic. If the bears are strong, they're just going to open here and sell. Give me a bear candle, I'm going to sell. And I saw that, I said, oh, good for the bulls, but I'm not buying until we get up here. And then it collapses, and up the high test, nothing to do. We get up, get down here, micro double bottom. What do I do? Do I buy? Do I sell? Acceleration back up into the range, nothing happened. So again, this day was a pretty boring day. A lot of hoping for things to happen. Get to this high, hope for follow through. We don't get it. Break above this high, tails on top, tails on top. So I'm actively in the market trying to find ways to jump in the market, but nothing distinct is happening, all the way up to here. Market end up going, but no entry for me. Scalpers would have been able to scalp. Pretty sure above a bull candle, maybe buy that, exit, we wait for a bear candle, bull candle, maybe there, didn't get triggered. Sell here, didn't get triggered. Sell here, triggered, exit. So it's been hard work, buy above here, exit. It would have been hard work even for scalpers. So, that's why I have 6 markets that I look at. Friday. It was Friday. Yeah, that was Friday. Friday tends to be a short day for me because I'm working throughout Monday to Thursday, London session into the open of the US session. And when I get to Fridays, I'm pretty open about it. I can do duties, go pick up my daughter from school, run a few errands. So it just depends what's happening. Asian session would have been interesting for you. You'd have seen a wedge top there. You'd have said, okay, I want to sell. I know I've got this low that has taken place. Don't sell there, wait for it, break out, pull back, and if you're able to get, if you see that, if you're able to get in there, do it quickly, right? Put a correct stop measured move somewhere above here, etc. If you didn't get it, try and sell about down here because you don't know how far it's going to go, but that's a decent enough breakout. You're going to sell that because, okay, no, you're not going to sell that. I hadn't put the measured move in, right? Because you're right into the measured move. For some reason, add our measured move. Or you could use that actually, let's be fair. So that's the measured move when you're trading that. The breakout continues. You could use that. Right. But bear in mind now, the only problem is where you put the stop. That could have been the one that precludes you because we don't put the stop above breakout. We find the nearest level. There's nearest level, lower high. So let's say we put our stop there. Do we have 1-to-1? Yeah, we have. So that's legit. You have 1-to-1 to get to that measured move. Fine. If you didn't use that measured move, if you just kept it there and you're trading and you haven't considered that as a strong breakout, and you see that, you don't take it. Don't doubt yourself. Don't take it. Just leave it. Okay. Don't look after the fact and say, I should have. Okay. In the next trade, we can consider that and say, okay, there's my measured move. What else can I do? I could probably have a leg 1. First leg, I've shown you guys how to use this. First leg, and the second leg is at the pullback. Let me move this to this side. So you could say first leg, second leg, there. First leg ends where the breakout ends, and we hit that smack bang. So that's fine. So you can take that trade there based on leg 1, pullback, leg 2, or based on, saying, okay, that's my whole breakout, which is legitimate within the zone. So you can take that and manage it. But when you start to see failures, potential wedge bottom, manage your stop, try to pull your stop down. Like I said, I pull my stop down to break even and then hold. Then you kind of didn't get rewarded. Did you get rewarded for waiting for anything? No significant breakout for us to trade. If you're taking that trade, stop is down here and you're aiming for that. Nothing wrong with that. Hold there and you put your stop here, that's the correct place, right? That could be there. Yeah, that's fine. It could have been rewarded 1-to-1. Had you got into there, but remember, you take a trade, it fails immediately. I would have exited here. Had you held and you trailed your stop up, I would have exited somewhere within here. So chances are you will not have got into that, but that's a good measured move. In any case, this is what we're talking about. This trade, then you this higher low breakout, going into the, I was still way out from the open, so you had an opportunity actually, guys. So now, after you took this trade, whichever way you managed it, boost right, best right, nothing for you to sell. Micro double bottom, micro bomb, inside, outside. One of our strategies, we spoke about that. Bull acceleration from that. Let's wait to get above the resistance. We get that trade, you could take that trade, which would be perfectly fine to take. I would take that trade. Okay, because now we are trading a higher low from a wedge bottom. There's all sorts of beautiful things that the boys have been doing here. You got a wedge. There's many ways to draw it. Another wedge here. You've got higher lows. Bulls have been showing strength. Got another higher low. Try to break out. Good for the bulls. You could actually have tried to buy that as well. Now, after breaking out above that, get out quickly beneath that or get out beneath that. That's fine. So you get a higher low. Remember, SOA went out to SOA. That parable that I use, you'll have losing trades and winning trades along the way. That would have been fantastic. Well rewarded. Get up to this, starts to fail, probably pull your stop up to here. I would have maybe got, would have been stopped out by the time we get to the open. At the open, I thought, well, this is fantastic. Let's see if the bulls are strong enough to break out above here at the open. We got a doji, they failed. Then we had a follow through candle. So after that doji, so that becomes a trading range, double top at the open. So if the bulls broke out above that, that's where they'd go to. So doji, we failed. Third candle trade, that would have been fantastic to trade. We wanted to wait a little bit more for confirmation. You take that, you aim in for that. At the open, take the trade and then manage it. And later on, this is still on Friday, the bears got rewarded. Trading range broke out beneath the trading range. Breakout pullback low one. You can get in anywhere within here. Decent enough breakout, guys. Let me slow it down. 4-bar breakout beneath this trading range, whichever way you put it. There on the tails, that extreme, the breakout, pullback, you can take that trade or take that trade, breakout pullback, or you could take that trade all the way into the US session. There would have been some good rewards taking those entries. Somewhere within there. Fantastic for us swing traders. You take that trade, hold on to it down here, or scale in here, right up into the US Open. And later on, if you're staying into the US market, we had failure here, so get off entries. Bull strike failed. Ooh, what did I click? Another trading range. Go for the measured move. So higher low, breakout probably higher one within the trading range. I would wait until I break out of the trading range. Breakout, you can take that trade and manage your way out of it. All right, guys. So I hope you found that useful. I thought I'll just walk through DAX40, show you one of the trades that I took. And we shall catch up again. Thank you very much. Name is George. See you again. Bye-bye.